Hey everyone, welcome back to What Changes. I'm your host, May. If you've been watching money news lately, you've probably seen all the big headlines. You've heard people arguing about rising prices, interest rates, and the stock market. But today, I want to tell you about something that's not on the front pages. I want to talk about a war. This isn't a war with missiles or tanks. It's not the kind shown on TV news with maps showing where soldiers are moving. This is a quiet war. It's happening in the hidden parts of the world economy. It's fought using supply chains, refinery plans, and secret deals that most people never hear about. This war will decide who controls one of the most important metals on Earth for the next 50 years. I'm talking about silver. Right now, silver is around $82 an ounce. I know a lot of investors are focused on how much the price jumps around. People are still arguing about the drop to $64 and whether the big upward trend is finished. But listen. That drop was just a small distraction. The number you see on your screen isn't the real story. The real story, the one that really matters, is what's happening with the actual physical silver. When you stop staring at price charts and start looking at where the real silver is moving, everything looks different. When you see who's buying it, who's losing their chance to get it, and why two huge world powers are racing to grab it, you understand we're in a totally new situation. So get ready. Today on What Changes, we're diving deep into the secret world of silver. By the end, you'll look at this metal in a whole new way. Let's begin with a question that sounds easy, but is actually the key to the whole thing. Where does silver really come from? I don't mean where it's dug out of the ground. I mean where it comes from before it hits the trading exchanges, before it turns into a number on your trading app, before New York's COMEX lists it as stock, or before London records it in their storage vaults. Where does the real physical silver start? The answer is Latin America. When you look at the world map of silver mining, Latin America is the main spot. Countries like Mexico, Peru, Bolivia, Chile, and Argentina are the heart of the world's supply. Mexico is a giant, producing about 200 million ounces every year. It's the biggest silver-producing country on the planet. Peru is right behind it. Together, those two make almost 40% of all the silver mined worldwide. This is super important to get. If you control the silver coming out of Latin America, you control the whole silver market. For the last 5 years, while most investors in the West were just watching price charts and trading future contracts, China was doing something completely different. They were carrying out one of the boldest plans ever to grab resources. And the scary thing is, almost no one in the West noticed. Honestly, I missed it too, until I started looking closely at the supply numbers. But once you spot it, you can't ignore it anymore. Here's what China did. They figured out that buying silver on open markets like COMEX or London's LBMA was not smart. Those places are open and clear. Everyone sees the price. Everyone can fight for the metal. So China chose to skip those markets completely. They went straight to the source. They went to mines in Mexico and Peru and signed long-term offtake deals. If you don't know what that means, an offtake agreement is basically a contract where the buyer promises to buy all the future silver a mine produces. China said they'd buy the silver in its raw state, either as concentrate, that's crushed rock with silver in it, or as doré bars, semi-finished bars that still need more work. Think about what that really means. China was getting the silver before it even counted as silver to the rest of the world. They bought it before anyone could set a fair price. Before buyers in New York or London even got a chance to offer money for it. China grabbed it early and sent it straight to their own factories. The silver never showed up on COMEX. It never appeared in London's storage reports. It basically disappeared from the visible world supply. Picture this flow, because it's key to why prices are acting the way they are now. Imagine a mine in Mexico pulling out silver ore. In a normal world, that ore gets refined nearby or sent to a refinery in the US or Europe. It turns into finished 1,000-ounce bars, goes into the global market, and everyone can see and buy it. The system works fine, but China stepped in before that happened. They told the mines, "We'll buy your concentrate right away. We'll refine it in China ourselves and pay you more than anyone else." So the silver left Mexico on a ship straight to a Chinese refinery. It got turned into usable metal inside China and never reached a Western market. Now imagine that happening with hundreds of mines across 5 countries for 5 years. This wasn't just smart trading. This was a big power move. They were clever too. They gave Latin American miners better prices and, more important, promised to buy for many years ahead. If you're running a mine in Peru and someone says they'll buy everything you make for the next 5 years at a higher price, You say yes. It takes away your worry. But all those deals together hurt the West badly. The silver that people could actually see and use to back trading contracts on COMEX got smaller and smaller. For 5 years, almost no one in the West seemed to notice or care. But then things changed. I think the big shift started in the second half of 2025. The United States finally woke up. And when I say the United States, I don't mean some politician made a speech or passed a law. I mean the real supply chain started moving hard. We began seeing reports that American refineries were getting huge amounts of silver concentrate from Latin America. There was so much coming in that US refining places got completely overloaded. Silver was arriving faster than they could actually process it. Let me say that again, because it's a huge clue. Silver was pouring into US refineries faster than they could handle it. This isn't about price. This is about supply. It means someone decided Latin American silver would go to the US instead of China. In the past, a lot of it went to Asia. Now it's staying closer to home in the Americas. The direction has flipped. And this flip isn't small. It's really big. What we're seeing is the US doing exactly what China did for 5 years. The US is locking in direct deals with producers. They're grabbing supply before it hits open markets. But they're doing it with more hurry. This gets to the heart of the fight. The United States isn't just buying silver. They're pushing China out of the Americas' supply chain. This is a real resource war. And there's one event that shows it perfectly. It happened on Black Friday 2025. That day, JP Morgan, the biggest bullion bank in the world, basically took silver off the market. They pulled back the available supply. What happened next was total mess. Someone big in China, who was short on silver, meaning they promised to deliver silver they didn't actually have, had to buy it back fast and hard. That wasn't normal trading. That was a rush. It was a panicked hunt for real silver that wasn't easy to get anymore, through usual ways. When America's biggest bank pulls silver away and Asia's biggest buyer has to panic buy, you're not watching normal market stuff. You're watching money war. This is like the Monroe Doctrine for 2026. If you remember history, back in 1823, President James Monroe said the Western Hemisphere was closed to European empires. He basically said, this is our area. 200 years later, the same idea is coming back. But now it's not about colonies. It's about resources. The US is basically telling China that Latin American silver belongs in America's zone. And notice how they're doing it. It's not with armies. It's with business. Lock in the deals. Overload the refineries. Control where it goes. Now I want to share one piece of data that really shocked me when I first saw it. If you remember only one thing from this whole talk, let it be this. This is when it all clicks. In any resource market, when big buyers get stuff, they usually hedge. They lock in a price to stay safe from big swings. That's what every book says they should do. If you're a big bank or a factory that uses metal, you buy the real stuff and sell futures to fix your price. It protects you if the price falls. But lately, that hedging has almost stopped. People aren't doing commercial hedging in silver much anymore. Once you get what that means, you'll never see this market the same. Here's the reason. A buyer who hedges is worried about price. They're trying to control money risk. But a buyer who doesn't hedge cares about only one thing, owning it. They want the metal in their hands. They don't care what happens to the price tomorrow. They don't care if it drops 20% next week. They want it stored safely. They want it under their control. When hedging disappears, that's the strongest sign the market is super strong for the long term. It tells you the buyers right now aren't regular traders. They're not gamblers betting on quick moves. They're not hedge funds chasing trends. This is big, planned buying by countries for the long haul. This is the kind where price doesn't matter, only getting it and keeping it does. And the market is starting to feel it. Like I always say, prices move before rules do. The market isn't waiting for a government order or new tax news. It's watching real metal moving. It's watching the hedging numbers. And it's setting prices for a future where getting silver is hard, fought over, and tied to world politics. Now let's look at China's side of this war. How is China reacting? China's worry is showing now that their access to raw silver from Latin America is shrinking. Their actions have changed a lot. There are reports of Chinese buyers going to producers and refiners in Latin America and offering to buy finished silver, not raw concentrate or ore, but ready-to-use refined silver. And here's the big part. They're offering $8 more per ounce than the current spot price. Let's figure it out. With silver at $82, They're ready to pay $90 for real physical bars. That's not normal. That's panic buying. That's someone who's losing their supply and will pay almost anything to get some. Think about it from China's view. For 5 years, they owned the early part of the chain. They got raw stuff cheap and turned it into metal themselves. Now the US is messing up that path. So what do you do when you can't get raw material anymore? You chase the finished stuff and pay way extra. At the same time, China said they will limit silver exports starting January 1st, 2026. Some people might think China is trying to trick the market, but I see it another way. China isn't limiting exports to play tricks. They're doing it because they're losing the war for supply. They need to keep what they still have. Export limits are what you do when you're scared about running low. This leads us to tariffs. There's a US law called Section 232. It lets the government put extra taxes on imports if they hurt national safety. Most people think taxes come first, then prices go up. But it's the other way around. First, countries grab supply. Prices move to match the new truth. Then, once they have enough at home, they announce taxes to keep the advantage. You don't tax stuff you still need. You tax what you already have control over. That's why silver prices can jump big without any official news. The market is guessing what comes next. It's setting prices for a time when the US owns silver supply in this half of the world and uses taxes to make it official. And I'm not alone in seeing this. JP Morgan and Goldman Sachs, the biggest banks, have both warned publicly about the chance of Section 232 taxes on metals. These aren't wild guesses. These are serious companies telling their customers to get ready for a world where metal stays closer to home and taxes become part of the price. But there's one more part to this story, and honestly, this is the part that worries me most. It makes this bigger than just US versus China. Silver is turning into something used as backup in a world moving away from the dollar. Right now, the whole money system depends on people trusting the US dollar. But that trust is getting weaker. BRICS countries are making new ways to pay each other. Central banks are selling US bonds and buying gold faster than ever. Behind closed doors, everyone is asking one question. If the dollar isn't the top anymore, what will hold up the new system? Gold is the clear choice. But here's the issue. There isn't enough free gold for everyone who wants it. Every central bank wants more. Every big government fund is saving it up. So what's next? What else is real, accepted everywhere, easy to divide, and already used in factories all over? Silver. But not the kind you use to buy snacks. I'm talking about silver sitting in bank accounts as backup for big promises. Think of it like the money you put down when buying a house. You don't spend that down payment. But without it, the house deal doesn't happen. That's what silver is becoming in the new money world. And I think that's exactly how China sees it too. Not as something regular people buy, but as an important thing on their big balance sheet. This kind of demand is brand new for silver. Before, silver was just for factories, jewelry, and some investors. The buyers were a small group: tech companies, jewelry people, regular buyers, maybe some big funds. That was it. But now add governments and groups close to central banks. Add BRICS countries building a new money setup that needs real backup. Add the US calling silver a critical mineral. Add China putting export limits in place. Now the buyers include the strongest players on earth. And the supply? It hasn't grown. Actually, it's getting smaller. We've had deficits for 5 years straight. Storage places are emptying. New mines take 7 to 10 years to start producing. Even if someone started a new mine today, we wouldn't see that silver until the 2030s. More buyers chasing the same or less supply, with storage getting empty. That's simple math. But most people haven't done it yet, because they're still thinking of silver as something regular people trade, not as a big world power thing. So let me bring it all together for you. I want you to see the full picture. I want you to get why silver at $82 isn't high priced. It's not too expensive. It's not a crazy bubble. It's just the beginning of a big change in value caused by things way bigger than normal trading. Think about everything coming together right now in history. First, the US is taking Latin American silver away from China. Second, US refineries are so full of incoming silver, they can't keep up. Third, no one's hedging anymore because buyers want the metal, not price safety. Fourth, China is desperate and offering big extra money for finished silver. Fifth, China is closing exports because they know they're losing control. Sixth, big banks are warning about Section 232 taxes as something real. Seventh, BRICS countries are making a new money system that needs real stuff like silver after gold. 8th, storage in New York and Shanghai is emptying at the same time. And last, lease rates in London are at 4 to 12%. The market is in super backwardation. If you don't know backwardation, it means today's price is higher than future prices. It means the market is yelling, "Give me the metal right now, not later." It's a clear sign of real shortage. All this is happening together. That's not just one good sign. That's every sign from the real metal world, world politics, and money systems all going the same way. I've never seen so many things line up on one thing in my whole career. And I don't think the market has even started to catch up yet. Now I want to be straight about the risks, because on What Changes we look at everything. I own silver, I'm involved in this, but there are still things I don't know for sure. How exactly is the US getting this supply? Is the government leading it, or is it companies doing it? What will China do next? They could offer even higher extra money. They could switch to mines in Africa or Australia. They could use their big power in refining silver. Remember, they still handle a huge part of the world's output. And we don't know how long this will take. It could be 6 months or 3 years. Fights over resources don't end fast. But let's talk about the big question everyone asks. Is silver at $82 already too expensive? Let me put it another way. Silver is at $82 when Chinese buyers are ready to pay $90. It's at $82 when the US is calling it a key mineral for safety. It's at $82 when two huge powers are fighting over who gets the supply chain. Is $82 expensive? Or is $82 just the market slowly waking up to what the real world already sees? You decide. But think about this. What if? What if the US really puts those Section 232 taxes in place? A 25% tax on imported silver would right away make silver cost more inside the US. Silver here would sell for a lot more than world prices. That extra cost would pull even more silver into the US, making other places lose it faster. COMEX would become the top place for every producer in this half of the world. London and Shanghai storage would empty even quicker. The tax doesn't just make prices higher. It completely changes how metal moves around the world. 5 years from now, people will look back at this time. They won't remember the drop to $64. They won't remember video titles. They'll remember this moment. The moment silver stopped being just a pretty metal and turned into a tool in world power fights. The moment two superpowers decided controlling silver was about keeping their countries safe. And the moment the price you see stopped showing what silver used to be worth and started showing how much the biggest countries want it. I'm not saying buy silver, I'm not saying sell silver, I'm just showing you what the facts are telling me. I own silver, I own shares in mining companies, and I do because of everything I just explained. The real metal movement, the hedging numbers, the world power moves, and the storage data all line up the same way. When everything points one direction, I listen. If you've been following the facts with me, you know storage is emptying, you know supply paths are switching, you know superpowers are battling, and silver at $82 doesn't even come close to showing what's really going on underneath. So what should you keep an eye on in the next few weeks? Here are the 5 things I'm watching, and I want you to watch them too. If my idea is right, these will prove it as it happens. Number 1, US refining problems. If they keep happening, it means the supply switch is speeding up. Number 2, Chinese extra payments above normal price. If they go from $8 to $10 to $15, the worry is getting worse. Number 3, any news on Section 232. If you hear even a little from the White House or Commerce people about silver taxes, treat it like an emergency. Number 4, storage amounts on COMEX and in Shanghai. If they keep dropping faster, everything we're talking about is happening just like the facts show. And number 5, the gold to silver ratio. If gold heads toward $8,000 and that gap gets smaller, then $300 silver turns from a guess into simple math. Keep watching those 5 things, and you'll see this story happen before most people even realize it. This story isn't finished. It's just getting started, and I'll be right here to explain it with you. My name is May, and this is What Changes. Thanks for watching. See you next time.